And we shall get started. So, good afternoon, everyone, and thank you for joining us today at Begin to Sell Internationally on e-commerce marketplaces. Online marketplaces hold such potential when you're exploring new overseas markets, so I'm really pleased to see so many of you here today. My name is Catherine, and I'm the Export Coordinator for the Department for International Trade. And today's speakers are Christian and Lucio from hellotax and George Bova from Rocket Shippers, but I'll let them properly introduce themselves in a bit. So today is part of the National Export Academy programme, a free series of events and webinars run by the Department for International Trade to help companies gain a deeper understanding of all the aspects of exporting so that you can begin to make money by selling internationally. There are 10 core modules being run monthly, as well as an incredibly varied programme of bonus events. New events are consistently being added to the programme, so do keep an eye on the events agenda, as I wouldn't want you to miss out on any of the brilliant sessions like today. Following the webinar, I will send round the recording and the slides, as well as Christian and George's details. So if you have any further questions that we don't answer today, you can contact them directly. In today's session, you'll hear from myself about why you should be looking at online marketplaces and how DIT can help, followed by Christian, who'll give us an overview of the European markets, Lucio, who will introduce the VAT considerations you'll need to take into account. We will then hear from the incredibly knowledgeable George Bova about e-commerce places in the US and how you actually get your products into the hands of the customer. It's great to set it all up, but how do the customers actually get the products? After the presentation, there'll be a live Q&A, so if you have any questions, please do pop them into the Q&A box, and I'll ask them to our experts at the end. So, what is selling online and why should you be doing it? Well, e-commerce has become an all-encompassing term, but there are three main routes it covers: selling through a company website, selling through social media, or on an e-commerce marketplace. Today, we will be solely focusing on e-commerce marketplaces. Selling on a marketplace can be an easier route to market, as less investment is required than with some more traditional routes, as the majority of it can be done from your desk. But please be aware it still requires expertise and a financial investment. The marketplaces have huge ready-made audiences and can be a great way to test how popular your product is in a market before you invest further in developing a more expansive export strategy for that market. I've put some key statistics here as to the potential which selling online holds, particularly on marketplaces. E-commerce sales were worth $5 trillion in 2021, which is just mind-blowing, and 55% of this was through global marketplaces. The top global marketplaces were Taobao, which is part of the Alibaba group and includes Rakuten, Apple, and Walmart, followed by Tmall and Amazon. So I've just popped in this diagram here to highlight what I suspect you can already guess and already know. E-commerce is growing rapidly everywhere. For buyers, marketplaces provide choice, competitive pricing, secure payments, quick delivery, and easy returns, as well as independent reviews. Online marketplaces are a huge source of global retail sales, and this influence is only growing. So this slide just quickly highlights that in 2016, the top 3 places for e-commerce were China, the US, and the UK. And it's just to give you an idea of the largest markets and their size. But obviously, this does not mean that they are the easiest marketplaces, nor does it mean that they are the best marketplaces for your product. That is only something that your market research will determine. However, just to plug Export Academy quickly, we do have a market research core module if you wanted to check that one out. So when you've decided that you want to sell online, what is the difference between selling on your own website versus selling on an online marketplace? I mean, you have complete control over your website. You can brand it however you want. You can send marketing campaigns there. And the likelihood is you already have a site set up for your UK customers. However, when selling internationally, your website requires time and investment. All the content needs to be localized and translated. You need to create and maintain a strong SEO rating so that your customers can actually find you. In comparison, an e-commerce marketplace already has the audience created. People go there because they have a product in mind that they want to purchase. There's no need to invest in technology that manages different payment types or local taxes. Sometimes translations are already done for you. The colors, the layout are all there to suit the local market. and you save on multi-channel marketing as the audience is already there. This means that it can be a faster route to market with quicker returns. It's also a great way to do some market research and get real feedback on your products before you invest heavily in selling into that market. However, as with anything, there are always some cons, such as you'll need to pay fees on all sales, which can affect revenue and requires a robust pricing strategy. Another Export Academy plug, we have an export pricing strategy module as well as part of the core session, so don't forget to look into that. It can be competitive and difficult to stand out, and not all products, such as very niche or bespoke or perishable products, are suitable for e-commerce places. Additionally, some countries may not have the infrastructure to support deliveries and returns, so there might not be a marketplace in the right market for you. Again, it all comes back to doing your research. So, how can DIT help? Well, we have a Selling Online Overseas program with which we've partnered with over 50 online marketplaces, meaning you can receive beneficial deals by going through DIT. We also have a range of e-commerce advisors and a huge program of webinars and events. If you haven't already, I would suggest you have a look at our great.gov.uk website, as it has such a wealth of information, including a whole section dedicated to selling online, as you can see here. So what's next? People get caught up in the how of e-commerce, but try to think about the what and the why. What are you offering? Why should people buy it from you? Don't be pulled in by vanity metrics of how big a site is or how many clients they have. What market is best for your product? And then which marketplace is most suitable? Test a couple of your best-selling products on a marketplace to get used to it and assess demand. If you do list your products on a marketplace, optimize your product listing, build up reviews, provide a good delivery service, plan for returns, protect your brand, and check legal requirements. So that's my introduction. I'm now going to hand over to Christian, who's going to take a look at selling online in Europe. So let me stop sharing my screen and hand over to Christian.
Thank you very much, Catherine. Where was at the top? Where was it? Share my screen. That's the one, right?
Perfect.
Thank you very much. Great. Here we go. So thank you very much. So I'm Christian. I'm based in Berlin. hellotax is a Spanish SaaS software company where you can easily submit your VAT Europe-wide. So as you can tell, Europe is very fragmented, but has a lot of different, products that people demand from all kind of regions. And yeah, it's due to its fragmentation, you can see that basically, and with the recent changes, which Lucio and Tusa will go into greater depth with, you will see that, for example, different tax representatives will be needed in different places if you want to trade that. There's thresholds, but I'll leave the tax things more to Lucy and Tusef because they're more the experts in that. But due to, for example, the people I speak to and the British transition from the EU, we see different patterns happening. A lot of people want to basically trade in Europe. They've had traditionally more a relationship with the UK. There's a lot of people who come from different nations that have a close ties historically with the UK, and we just see a bit, complications there. But there's some very unique opportunities. We obviously have the same big players in Europe that you will be familiar with in the UK or USA, let's say eBay, Amazon, etc. You have also big players, or regional big players, let's say Zalando or Fnac in Southern Europe, etc. So there's a lot of opportunity there. And you will also see a lot of smaller e-commerce companies that have a lot of similarities with the ones that we know from other big players. So we see some interesting trends, but there's a bit complication with the whole tax changes, and that's something Lucio and Tusa will go into great depth. But if you see here, as you can tell, it's not just one place where you have to submit it. You have in different regions, and our software allows you to very easily submit it. And yeah, if you want to speak to me, I could show it to you. And we have customer support in various different languages, and we have tax experts in all these different regions where you want to sell. And yeah, if you want to test it, for example, you have here app hellotax, or you can reach out to me. I can show you a demo or things like that. But yeah, so I think because of the recent political changes, there's a lot of opportunities there, and yeah, looking forward to having further discussions if you want to reach out to us. But I'll ask Lucia and Tusaf to handle the tax bit because that's the really complex thing. So, and I'd rather give it to the experts. Thank you very much.
Thank you, Christian. Hello, I'm Lucio, as Christian introduced me. I'm CEO for hellotax, accountant, EU expert on VAT, and we're going to talk about, the let's say the technical aspects of the marketplaces and the VAT in the Europe in this session. Christian, since you're sharing, I hope you don't mind if you can scroll to the next slide, please.
Absolutely. Tusaf was also writing to me. Do you want me to do it for you? Just tell me next slide. Is that okay?
Yes, please. Yeah. Yes, please.
Good.
Thank you.
Sorry.
Thank you.
So yeah.
No, previous one.
Oh, apologies. Yeah.
Yeah. Okay. Let's say that marketplace. In general, when we think about the marketplace, we tend to identify a logistic place as Amazon, eBay, and Real, Zalando, and so on. But according to the EU law, there is also a specific definition of a marketplace. So the marketplace must have some specific features that allow him to be defined as a marketplace in order to being compliant also with the world VAT in Europe. In general, selling through a marketplace for sellers, especially the international, so the non-EU sellers, as the UK sellers, for instance, it means that they might join very many facilities and benefits like access clearly to a multi-country market in the EU, and the most important thing, letting the marketplace being liable, so being the one responsible for collecting the VAT for B2C transactions. Okay, this is very important because when we are talking about the marketplace, we identify also in the legal aspects also the third party responsible for the VAT payment in case of non-EU trades. And this is important. This is important in order to do not make confusion for within marketplaces. For instance, we received in hellotax many requests asking, "Hey, is this a marketplace or not?" Because if a market, okay, is not a marketplace, clearly it will not collect the VAT. So the seller is going to be directly liable instead of the marketplace. So being very careful with it. So the key marketplaces in Europe are currently Amazon, eBay, and then we have some local marketplaces like Price Minister, Real, and Zalando in Germany. On the other side, trading through a marketplace means also that we will be affected by the fees that they are charging. So compared to a direct e-commerce, clearly trading in a marketplace is more expensive, okay, despite the benefits. Also, the logistic, it's not under our direct control. And then probably this is the most important thing, that there is a seller's rivalry within the same product and within the same market. If you can jump to the next slide, Christian, please. So, and this is the picture for the EU, okay? So the VAT rates that vary. So the minimum it's 19% in countries like Germany, up to the maximum of 27% in Hungary. The average VAT in Europe is 21%. Usually the principle that changed the EU VAT regulation from the 1st of July, stating that after 10 key of thresholds, the VAT has to be charged in the destination country, okay, according to the local VAT rate. But in here, as we said before, by using the potential of the marketplace, what will happen? If you can jump to the next slide, Christian, please. We have two types of transactions that, let's say, allowing us to saving also money in terms of consultation with local accountant and so on, for the simple fact that the marketplace is becoming liable, so is effectively paying the VAT on behalf of the seller, but just for two types of transactions. Okay, those transactions first of all must be B2C. Okay, so this is not applying for any B2B trades. Okay, so if the goods, okay, get stored in Europe, in that case, the marketplace will collect the VAT on the Amazon consumer, okay, from the Amazon consumer, and will pay it on behalf of the Amazon seller, okay, in this case, the non-EU Amazon seller. But upon two main differences. The first thing, as I said below, it must be that the goods are stored in the EU. Okay, in case we are shipping from non-EU directly to the marketplace, or in this case directly to the client, okay, the marketplace will collect the VAT for transactions up to 150 euros limit. Okay, above 150 euros, okay, the seller is getting responsible for it. But this is the option that happen in case we are selling. So we are selling directly from non-EU countries, so to the seller. Okay, so for instance, directly from the UK to Spain, for instance, with a transaction that has a value above 150 euros. Okay, for the rest, the marketplace is getting responsible for it. Practically speaking, this means that trading through a marketplace, we don't need to make a VAT registration in the EU countries where we are selling. Okay, we don't need it unless we don't store, okay, in the countries where we are selling, because in that case, as per the EU law, the scenario will totally change. But for instance, if we choose a country, a random country in Europe, for instance, Italy, to storing, all our goods, okay, and we are shipping from Italy to other EU countries, we don't need to make any VAT registration in the destination countries at all, because in this case, the marketplace, for instance, Amazon, will pay and will also report the VAT transactions on the Amazon seller behalf. At this point, I would like to pass the word to Tusi Fazlan, CPA for hellotax, responsible for the UK market. And we're going to have the possibility to answer to additional questions later in case you need further details. Thank you very much.
Thank you, Lucio. Christian, could you please move? Yes, thank you. As everyone knows, so first of all, let me tell you about myself. I am the UK accountant in hellotax. I look after all of our UK clients, mainly dealing with UK VAT. So as everyone knows that a big transition happened in the EU from 1st of July 2021, but the same transition happened for UK on 1st of January 2021. So there were a lot of questions how UK sellers are going to sell in the EU, how EU sellers are going to sell in the UK. I would try to answer some of those questions as quickly as possible. Online sellers in the UK need to store in one of the EU country just for the purpose of delivering their stocks to their sellers in the EU more quickly, because sales from UK into EU are now considered as exports, and vice versa from EU into the UK. Online sellers in the EU, they need to store their goods in the UK to fulfill their orders more quickly. The Amazon FBA program does not include UK anymore. However, there is still option of importing goods into the UK and going through the customs, which we will talk about a little bit more on the next slides. Next slide, please, Christian. Okay. So first of all, reason for registration, this has changed as well from 1st of July and 1st of January in the EU and UK. So the rule of thumb for VAT registration stays the same, that if you are storing in an EU country or UK, you need to register for VAT. So if you store your goods in the UK, you need to register for VAT in UK, and similarly for EU. For EU, the rules changed a little bit from 1st of July, 2021. So if you are storing in any EU country, you still need to register for VAT. But the reason for distance sales registration has changed. I will be talking about this a little bit more on our last slide as well. Next slide, please, Christian. Okay. The same change that Lucio were talking about on the marketplaces collecting VAT for sellers has been applied in the UK as well from 1st of January 2021. So the first change that it brought the new e-commerce package that it abolished the low consignment relief, which was £15 or less. So no VAT was charged previously. Now VAT will be charged on every product that is imported into the UK. The only difference is that if you are trading through an online marketplace and the value of the order is less than £135, then you don't need to pay the import VAT, and the marketplace will basically collect the import VAT for you. So the marketplace does the same thing as my colleague was explaining in the UK. So they collect the VAT on behalf of the consumer and pass it on to the tax authority with the reference of the seller, of course. But there are a few catches that applies if your order is below 135 pounds. And another catch is if you are a non-UK seller and you are storing your goods in the UK, the marketplace is still responsible for remitting your VAT. However, the seller will be reporting the VAT. The difference is the VAT is collected and paid over to your tax authorities by the marketplace, for example, Amazon, but the seller would still need to report the transactions on which the VAT has been collected by the marketplace. So that's a little bit different there. Next slide, please. Okay. So as I was saying, that another reason for VAT registration is the distance sales. Previously, there were different distance sales threshold in each EU country back when UK was part of the EU as well. For example, Germany had a threshold of 100,000 euro, France 35,000 euro, and all. But that has been changed from 1st of July by the introduction of OSS. So with OSS now for EU sellers, they have a collective distance sales threshold of 10,000. And if that 10,000 threshold is reached, they have two options. Either they can continue as they were doing before OSS and register in each country where the distance sales threshold has been met. Just to clarify, distance sales is actually sales from one EU country into another from directly to consumer. So that would be B2C. Or they could register for OSS and report all of the distance sales in the country of their registration, in the country of their establishment, pay the VAT at the rate of the destination countries to their home country, and their home country tax authority will actually disperse the relevant VAT to the relevant tax authorities. So it has been made very simple for our EU sellers. There are a lot of regulations, but I would try to just summarize the big ones actually. So if the 10,000 threshold will only apply if you are just storing in one EU country. So if you have multi-storage, then the threshold doesn't apply. And it also does not apply for the non-EU sellers. So this is actually the summary of OSS. Next slide, Christian. Okay, that's actually all of them.
We don't have more slides.
So great.
Sorry.
Yeah. Thank you. Thank you. Over to you, Christian.
If I can just a side note regarding the OSS, okay, looking at the UK client perspective, okay, as non-EU sellers, I would add that I would suggest to non-EU sellers to register for OSS in case, in addition to trading through a marketplace, they are trading out of a marketplace, okay, because all transactions through marketplace will be deemed by Amazon. The one out of a marketplace can be included into the OSS, okay, which will allow the sellers to do not make a registration in all destination countries where they're selling after the famous thresholds of 10,000 euros.
Amazing. I just have a quick question. Could you just very, very briefly, before I pass over to Christian, explain what OSS is?
Yeah, I'm Lucio. You were referring to me, I suppose, right?
Whoever would like to take the question.
Okay. Okay, I will go for it. OSS, first of all, stands for, it's the abbreviation that stands for one-stop shop, okay? It's a special tax scheme for VAT, okay? Works in Europe. Basically, instead of the principle, it's very easy, okay? It's in force since the 1st of July as well as the regulation for the deemed transactions. So the seller who wants to sell in many EU countries, okay, in this case out of a marketplace, instead of making a VAT registration after passing the threshold in every destination country where he's selling, he can simply make a registration in one EU country as it own choice, okay, and paying the VAT in the destination country from the origin country through a unique platform. For instance, let's say that you make the OSS registration, okay, so you join the VAT platform in Germany, but you're selling in Italy. The Italian VAT, 22%, it will be paid in Germany. So the German government will collect the VAT for the transactions in Italy, Spain, Portugal, and so on. And after the return, will spread the amounts to the corresponding countries. Okay, so this will avoid the need to make a VAT registration in every country. So one registration in one EU country only, plus the OSS, that I would like to remind you that it's optional in any case, because you can still opt to register in all EU countries. Then you're gonna need lots of accountants and lots of people that are taking care of your compliance. Yeah.
Amazing. Thanks, Lucio. That's perfect. So there are questions coming in for you. I'm going to hold the questions to the end. I'm going to pass over to George from Rocket Shippers now, who's just going to take us through the US market, and then we'll take questions at the end. So George,
thank you.
Over to you. Thanks, Lucio.
Absolutely. It's very nice to meet everybody. My name is George Bova. I am the Vice President of Sales here at Rocket Shippers. We are a third-party fulfillment, pick, pack, and ship, e-commerce brands and B2B retail preparation, Amazon retail preparation, as well as retail replenishment. Just first and foremost, I wanted to thank Catherine, as well as DIT, and then a large shout out to a good colleague of mine, Tracy, who has joined this webinar. So thank you for joining. Hopefully, can you see my screen, Catherine?
I can indeed, yes, perfect.
Perfect. So what we'll be going through today is just kind of the domestic United States marketplace and how e-commerce brands are able to sell, different verticals and marketplaces that you'd be able to list on, whether that be retailers, your own shopping carts, and how distribution really works in the United States. Rocket Shippers is a third party with multiple locations in the United States who help with multiple of these brands in the sense of distribution, pick, pack, and ship, and preparedness of their product for resale, as well as direct to consumer. If you'd ever like to look us up, it's rocketshippers.com. And then our parent company, Pride Global, who is a business and services company, is just prideglobal.com. So the e-commerce landscape of the United States, obviously, it's much different than it is in the EU, as well as the UK, just as America is such a broad and large country. 263 million Americans shop online daily from statistics of 2021. This number of consumers and your customers is only growing rapidly, especially as COVID continues to move forward. But what we've actually seen as a trend line is that people are much more comfortable at home clicking a button, buying it now, and then moving forward from there. 670 billion euros in the e-commerce sales of 2021, just in the United States, just showing how large the marketplace is and what a opportunity it is for any sort of international brand to break into the domestic market. Now, there's always going to be a large transition, whether it's inventory, making sure you have the correct WMS, warehouse management software, and the right partner who's going to be able to prepare and fulfill your orders for you so that you don't have to be worrying about shipping abroad all of the time. 10% of all retail sales will be made by mobile on 2025. The reason that I wanted to bring up this statistic is we're seeing more and more of these marketplaces, as well as the online consumer, work through their phone rather than their computer, whether they're sitting on a train, in a car, purchasing, and the retail side of things has exploded since COVID has begun, whether that is in the pet industry, cosmetic industry, fitness industry, all of the above, foods. People are just ready to purchase and have that liquidity going on. And then 55% of Americans start online to find major purchases. So whether they know a brand that they're going to be looking for specifically, or if they're just going onto Amazon, Target, Walmart, and are looking just for kind of a general grill or patio set, you'll be able to brand and market your brand through these marketplaces. How Americans shop online. So there are three different areas and verticals in which you can actually place your inventory and your items and SKUs. Online only retailers, which is going to be a full e-commerce, is going to be Amazon, eBay, and Etsy. Whereas there are two sections of Amazon, FBA and FBM. FBA is where we would prepare your products for vendor compliance and send it into Amazon, who will then distribute it and allocate that inventory to all of their distribution centers throughout the country. The positive part of this is that you will have inventory that can touch 99% of the United States population. The one downside of this is it does cost you money for them to allocate it to their distribution center. eBay and Etsy are also in a large marketplace, and I will be going through the top 5 major online retailers, which would be good targeted retailers if you are looking to break into the domestic United States. Hybrid retailers are Walmart, Target, and Best Buy. And what it means by hybrid is that they have an online marketplace in store, in which case somebody can place an order and it can actually be shipped from a third-party partner and fulfillment service or from the brand itself, as well as, again, vendor compliance and B2B preparation, where your items will actually be in store and ready for purchase. Independent storefronts would be any shopping carts that you're utilizing for your own brand. This includes Shopify, Magento, BigCommerce, WooCommerce, and these would all be API integrations into a WMS and warehouse management software that allowing it for it to communicate orders and us for to pick, pack, and ship them for you. Independent storefronts will be much more direct consumer based. A few EDI retail connections are able to go through them, but usually that'll be for direct consumer. Whereas with the retailers, you're going to be looking at EDI connections, which takes more time. It's a little bit more money, but from a retail standpoint, much larger volumes of product. As we can see, Amazon did 2 trillion monthly visits in 2021. That was their average. Second place, eBay, 688. Walmart being third, Etsy fourth, and Target fifth. There are several other retailers that did not make this top 5 list, which partners such as myself and our operations team are able to give advice and show you kind of trend lines that we see with our customers who we have in many different verticals, as I said. But there are also smaller retailers such as Touch of Modern, Cratejoy, where subscription boxes and one-off sales, flash sales are able for you to do really get rid of any excess inventory, do a large flash sale of sorts, and then be able to replenish any new SKUs or inventory that were able to be sold. America has one of the world's most dynamic market. The largest difference, as I said, is we are a big country, and that is something to take into account as you continue to kind of break into the domestic market. Shipping costs, transit times, allocation of inventory, and where the percentage of your customer base is always going to be important things and trends lines and information to have as you develop into a partnership and make decisions of where you want to allocate your resources. So it's wildly varying climates, cultures, desires, as well as populations. So a brand that would be kind of swimwear would be going Florida, California, just based on our trends because of warm weather. Hotel Chocolat with hot chocolate, obviously an East Coast winter as we are in the midst of a snowstorm coming up. And there are several different areas in which kind of the United States you can really allocate resources depending on who your customer base is going to be. Something nice about rocket shippers as well as other 3PLs, but I'll speak just towards ourselves. We have locations in Nevada, Kentucky, and New Jersey, allowing you to really reach each coast as well as Central America. 99% of the United States population allowing for transit times to really diminish and costs of shipping to diminish, because the way that the United States have it with the carriers, FedEx, UPS, USPS, is everything is based off of the zone from where it's being shipped to. So if you're shipping from New York to California, that's the furthest you can get, except for Hawaii, which would be a zone 8, and you'll see your shipping costs increase dramatically. Another aspect of marketplaces that you're able to branch into, and this we're seeing more and more, are the Facebook marketplaces, the Instagram marketplaces, where communities are really being built, whether it be just for a conversation or questions and answers, some subscription box models, but you're starting to see a lot of these little communities pop up. And it's making it very easy from a mobile standpoint and an e-commerce standpoint to really target your key demographics through SEO, Google searches, Amazon searches, and really add from a marketing and advertising budget, knowing where your actual customer base is going to be. The largest thing and trend that we've seen through COVID is that the consumer now in America wants their product, and they want it fast. Amazon has developed this 2-day prime shipping model. And so having those resources available and having those discounted shipping rates, such as we have, usually around 65 to 70% off what an individual company would be able to have, would be able to get you into that section of carrier costs where it'll be zone 2 to 3, 1 to 2 day shipping from anywhere, and your transit times and your costs will be down. But there is this kind of expectation now that Americans want it, and they want it fast once they click that buy button. Now, this is going to be from a self-fulfillment standpoint of international companies, UK, European, any international companies, if they are going to be doing self-fulfillment. As you'll see here from one, if you were to be doing fulfillment yourself just based off of your own retail inventory, going to any of those retail stores we just discussed, or going through your Shopify, WooCommerce, BigCommerce, and going directly to consumer, you as a company and a brand without a partner will be managing inventory directly. You'll be having to integrate with your retailers in storefront one by one, which can be costly as well as time consuming. Ensuring that the regulatory retail compliance is always withheld. A lot of the retailers here will always have vendor compliance, whether that's on barcodes, labels, UPCs, how things are packaged. So that would be something that your company individually would have to do. And then obviously from a warehouse pick, pack, and ship standpoint, shipping it across the Atlantic over to the United States, obviously always going to be more costly, duties, taxes, customs. You'll be then going to this number 2, handling customs and issuing customer by customer if you're doing individual packages. So making sure that you have a team from an operational standpoint that knows that duties and taxes, such as Christian and Lucio had just spoken to. And then in the United States, you're going to be paying variable shipping rates based on the customer location because it's coming directly from you. Now going back straight to you, if you're still doing self-fulfillment, you're going to be processing returns and providing customer service, which again is going to be at a much more costly standpoint because it has to be sent back to the UK or any place into the EU. So obviously it's going to have a larger transit time and a much more costly return policy. So a lot of things that individual companies without partners are having to manage while also looking at their sales, growth, and anything of that nature. Having a 3PL, third-party logistic and fulfillment partner in the United States truly shaves off 4 out of the 5 of these pieces. So if you are a UK or an EU-based company and you find yourself in the notion of breaking into the domestic United States, finding the right partner in 3PL to house your products, service your products, make sure your inventory is safe, and then pick those products is always going to be a very helpful nature. All that will be is really finding the partner that fits with your company's vertical, what their beliefs are and their thoughts. Having all of your inventory sent over, whether it be from a production and manufacturer, in Asia or in the EU or the UK, and then actually setting up an API and EDI connection to our warehouse management software, which allows you to see live inventory tracking, create and importing orders, tracking information to go back to your customers, return processing. So with our WMS, it's cloud-based, unlimited amount of users, but it allows you, as I said, manage your inventory remotely, making sure that if you are getting low on a SKU, a UPC, or any of your stock, a flag or a notification will come up so replenishment is able to happen. 3PL handles the pick, packing, and shipping. So we have internal boxes, internal dunnage. We're able to do branded inserts, marketing materials, and boxes. And we have discounts and partnerships with several of those, which are very helpful for large brands who want to really have that branded and marketing aspect when a customer opens that box. High volume shipping in existing channels, because we already integrate with all of these retailers for current customers, you're able to really piggyback off of our connections. So it'll be a much quicker connection to Target or Walmart or Amazon than if you're doing it individually and solely by yourself, whereas you have to actually develop that relationship and sign in. And then returns and customer service is handled in the United States. So if somebody does not like the product that they receive, instead of it having to go all the way back across the Atlantic, it's able to come into one of our facilities. Returns are processed very quickly, which then allows that customer to have a really nice experience and leave you a good review, as well as having a retention rating for yourself, as reviews continue to come through. So having a 3PL in the United States will really alleviate a lot of those specific action items that you would have to do if you were doing self-fulfillment from your own brand, warehouse, or store location. Cost of navigating North America, I wanted to introduce just because obviously the domestic United States is a large area, but we also have Canada and Mexico close to us as well. So for self-fulfillment, if you were doing it again from yourself, from an international standpoint, sending it to Canada, you're going to have air, waybills, packing lists, custom invoices, CAD, VATs, all of the above. Mexico, you have to have a Spanish language commercial invoice, pro forma, bill of lading, packet list, all of these specific things that are going to be coming from your country to a specific another international customer. From a 3PL fulfillment, you'll only handle exporting your goods to the US because you know that we're going to be housing and fulfilling it for you from the domestic US. So we have a much less stringent process where we're shipping to Canada or shipping to Mexico, especially when it comes to individual direct-to-consumer projects and orders in themselves. So I have actually included this, and you'll be able to click on this link, this usitc.gov, which will allow you to see what the duties, customs, percentage, and cost would be for certain types of goods. But from us, it would just then be VAT and a small duties rather than a large 40-foot container of potential stock and inventory. Your 3PL partner will handle the rest of it at lower costs. There's only a 5% tax needing to exporting to Canada. We are developing a new fulfillment center in Canada over the next year or so, so we should have a location there where we're able to allocate our resources and inventory for our customers. So you wouldn't even have to have that at that point. And then we get preferential shipping rates to Mexico and Canada as well, just because of the relationships we've been able to develop with all of the major carriers, as well as our locations based on shipping locations in Canada and Mexico. Now, do you need a partner? That's the largest question, because obviously there are pros and cons to everything from selling on Amazon to other marketplaces, direct to consumer, as well as then self-fulfillment. If you're doing it on your own, you have complete control over your own supply chain, everything from production, manufacturing, shipping, duties, taxes. You have full control of everything because you guys are the one that would be handling it. And there's a lower initial investment just because you're not then implementing and getting a partnership with a third party. Now, that initial investment that would happen coming with a partner in a 3PL would be something that would allow you to be onboarded, implemented, and making sure all of the connections, API and EDI to retailers and just to your storefront are correctly set up, communications are being correctly sent, test orders are done, making sure that everything is really seamless and automated, because the entire point of having a 3PL partner is so you don't have to monitor it and it's just done automatically. Doing it on your own, you must be an e-commerce expert. There are so many different niches, so many different avenues that you need to know, especially with the United States. Different trends are happening, every single day something new is occurring. And then high levels of service requires a high effort and cost. So hiring on customer service representatives, accountants, any sort of 1-800 numbers, anything for Amazon if there's ever a problem with vendor compliance or any inventory and operations staff. A lot of overhead will come into play there, whereas you can shift that cost to us who already have this operation and all of the capital in our business. So all you have to do is worry about your inventory and your sales. With a 3PL partner, the pros outsources the tedious and expensive work, such as finding those boxes, finding the dunnage, finding those carrier and shipping rates that are discounted, having location and warehouse space, and it allows you to focus on your business, as I said, from a marketing and sales perspective. The one negative thing is a higher initial investment, which is usually going to be setting up all of those API, EDI connections and retail connections that we spoke about, and then must vet the vendors that you guys are going to be working with. So although we connect with all of the major retailers, you would still be in charge of building that relationship. Something that's nice is we do have relationships with several buying groups, so we're always happy and willing to make introductions. And then our operations staff always reaches out from a proactive standpoint to kind of see trend lines that they're seeing in your business and how it could be better or more cost effective. The ABCs of finding your perfect fulfillment partner. You need to find a 3PL that's accomplished. Track record of success is vital when it comes to customers because we want flawless shipping. You don't want your customers opening up a box and everything broken on the inside. You want a potential partner who knows exactly if it's a glass product that it's going to need a specific piece of dunnage or poly mailer or box that does have protection on it. If it is a food-based product or a meltable cosmetic or a chocolate, knowing what type of ice packs or what type of cooling and temperature that the warehouses need to be. Bespoke, an invisible partner that's able to offer fully customized and on-brand shipping experiences. This goes into play of being able to really provide any sort of branded marketing material. So we have customers who provide us a template and we're able to quote out for specific branded inserts saying, thank you, Deborah, for being a customer. Here's a 20% referral code for your next purchase. We have those types of partnerships where we're able to get those types of inserts at a very discounted rate for you. And that, that insert has been one of the biggest investment for most of our customers because those marketing materials are always looked at, especially when there's discount codes involved. The next thing is being connected. So available 24/7 through online dashboards and having a fully integrated with retail platforms. And this is where software comes into play as a huge aspect of having the right partner. You need a software that's going to be robust, provide analytics and historical transaction, replenish and refreshes every 15 minutes so you know exactly what your live inventory looks like, has the ability to add aliases and bundles if you're doing flash sales or putting different SKUs together into a kit, and has the ability to do all of the above from Amazon preparation, fulfilled by merchant, which is when you are listed on Amazon, but your 3PL is still fulfilling for you, knowing the vendor compliance, because if you mess up on a UPC label or your individual units are not UPC barcoded or labeled, there can be fines, and Walmart and TJ Maxx of sorts, they can even negate and say no to your inventory coming in, which is then just a weight of transit costs as well as kind of time. So your next step is just doing your research and familiarizing yourself with the US market and identifying the potential customers. And this is again where we would be very helpful, but you can really find several different partners that would be able to help with this. But knowing what your product is, what the type of consumer you're actually facing and who you're going for, and really setting your marketing and advertising to that so that that is reaching the customer. Aiming for sustainable growth, which is targeting those key demographics and markets around the major shopping events. If it is Black Friday, knowing that you need to have your inventory in there in a retail space and having your shopping cart, whether that's Shopify, with a marketing ad so that you know that customers are actually seeing you and you are visible during those holiday season rushes. And then finding the right partner, working with a 3PL that can meet your unique fulfillment needs, whether that is a specific way to package items, kitting and bundling, or even just responsiveness where you know if you call, somebody's going to answer, you know, within 5 minutes, 10 minutes, rather than a Zendesk or a 1-800 line. We do have a partner with several different areas, but Apram is one of our supply chain partners that help with international customers. And again, you'll be getting this slide deck. But if there's any sort of need or questions that is after this webinar, I'd be happy to, one, answer myself, but also introduce you to any of my partners that I've been able to develop to help bring you into the United States marketplace. If you ever need anything, this will be available for you. This is just a piece of our team, but we would love to chat and help in any way that we can. So I hope, yeah, perfect.
Amazing. Thank you so much.
Absolutely.
So that was absolutely incredible. That was a rush through fulfillment, US, Europe. That was, yes, that was amazing. Thank you, everyone. So I see that Tusif and Lucio have been very active answering questions. So there aren't really many for me to read out there about VAT, unless anyone has any more that they want to send in. But George, we have a couple for yourself. So one of them was, what's the best way to estimate shipping costs to ensure that the customer pays that part of the cost?
Absolutely, and that's a great question. So one of the things from a partner level is we have negotiated shipping rates, which we share with all of our customers. So from an individual business's standpoint, there's always going to be, you know, dependent on the volume, what the carriers are going to provide them from their basis, and they'll provide Excel spreadsheets with shipping costs. With our discounted shipping costs, we provide that with the customer so they know what the baseline is of it's going to cost $5.61 to ship anything under 5 pounds anywhere in the country using FedEx home delivery. Knowing that, then our customers are able to build in a margin and say, okay, so from the perspective of knowing that $7.99 to $8.99 is a very reasonable shipping method here in the US, being able to build that margin and knowing that that $3 of profit can then pay for its fulfillment. So utilizing your partners and having that conversation and communication will always be important, but having that information and transparency is something that we always provide. So then you're able to make those decisions from there.
Amazing, thank you. So Lucio and Tasif, one of the questions that we had for you was, if you realize that you've made an honest mistake with VAT, because obviously with all the different countries, what's the best thing to do? If you've realized you've made the mistake before the tax man has picked it up, yes, what would you do? What's your advice there?
Well, the most important thing in general is always being compliant, okay, on tax purposes. To our clients, you know, in case we realize that they have done some mistakes, or even with their previous tax consultants, we found any errors in the due diligence that we ordinarily process when we onboard a new client, we always suggest to amend what they have filed. Because by amending, you have the possibility to fixing the errors before the tax authorities comes to you with an official tax claim. Okay, this is very important. In some countries, actually, like in Italy, there is also the possibility of using the voluntary disclosure system. Actually, it's a system that, you know, provide to self-calculating the penalties and interest in case, for instance, you miss to file a VAT report or you miss to pay your VAT on time and so on. So you calculate those fines that, you know, are reduced 1/3 of the official one, and you're gonna save lots of money in case you self-declare. In this case, your fault in payment or in the filing. But definitely, it's always convenient to staying strictly within the rules and amending the reports.
Amazing, thank you.
Yes, I would like to add here. The first thing, definitely what Lucio said is what everyone should be following. But the first thing anyone should do is consult the relevant expert. The reason for that is, for example, if I give you the example of UK, if you have made an honest mistake without concealment or anything, in the law, we have the possibility to not file an amendment, but we include those transactions in the next VAT return if the error is less than £10,000. So it definitely depends on where you made a mistake or where you're registered and all of that. So the best thing anyone should do is, as my colleague said, first follow the law, be compliant. But if you made a mistake, go to an expert, talk to them, share. So most of the time there is an easier way out.
Perfect, before it all accumulates and gets far bigger than you would have liked. Perfect. So I think I'm actually going to end it there if we've got no more questions. Thank you. Oh,
There
no, go
was
on.
one question from Mina Forrest that I just wanted to respond to. In regards to frozen perishable goods and recommending e-commerce marketplaces instead of just traditional brick and mortar shipments. So frozen perishable foods is always going to be specific 3PL partners such as UNFI, who already have marketplace and partner agreements with the large kind of Trader Joe's, things of that nature. So finding a partner such as UNFI or any of the other kind of frozen goods and 3PLs that handle perishables is always something that's very, very helpful. So if that's something, I'm happy to introduce you to anyone who's in that kind of vertical. So
fantastic. And in that time, I had missed that question. So I'm pleased that you picked that up. In that time, Elizabeth has written in, and again for Tusif and Lucio. Elizabeth says, I'm based in the UK and my products are stored in the UK. I sell on Etsy and use their OSS for VAT sales into the EU. Is that correct, or should my products be stored in the EU?
Sorry, but I think that we already answered to those questions directly.
Okay.
Not sure, because I can see several answers, from.
So this has come into the chat, not the Q&A.
Oh, right. Sorry. Okay. So it's another. If you can repeat, because I was too focused on the Q&A.
No, there's just so many avenues for this software.
Okay.
So Elizabeth is based in the UK. Her products are in the UK. She's selling on Etsy and using their OSS for VAT sales to the EU. Is that correct, or do the products need to be stored in the EU?
Okay, let's say that Etsy, as far as I understood, is not considered as a marketplace. Okay. So the seller must investigate, because being a marketplace will make the difference, but under the EU law perspective. Okay, so the best thing to do is contacting Etsy and asking, are you considered a marketplace? Are you collecting the VAT on my behalf? So in this case, if the goods are shipped from the UK, okay, to Europe, okay, it works the 150 euros threshold. So after 150 euros, marketplace is not responsible. But if the goods, as you said, are already in the EU, in that case, there is no threshold. So the marketplace will collect the VAT. But the seller must be sure that Etsy is considered as a marketplace, because this will make the difference. We constantly receive requests, hey, Shopify is a marketplace? No. Okay, so in that case, all the standard rules for the VAT different on the deemed transactions apply. Okay, so in this case, my previous explanation of suggesting for an OSS registration, it would be definitely convenient.
Perfect. Amazing. I'm glad I've got you guys and George here, because this is all very interesting. So I'm going to wrap it up here and say thank you to my marvelous speakers. Thank you to everyone who's attended. As we said earlier, I'll send around the recording and the slides and Christian and George's details so you can all get in contact. Thank you so much for coming, everyone. Thank you.
Thank you very much.
Thank you.